And joining me on the podcast right now and on video, and you can see him in his suit there. I'm not sure what's going on from the waist down, but he's got a suit waist up anyway. But Paul Hill, full-time analyst and investor as well. Paul, how are you, fella? You all right?
Yeah, good morning, Justin. Thanks for the intro.
I got to say, we do this now bi-weekly. And
Yes.
it seems like the status of life that, but bi-weekly, so you can catch us. And if you want the video and see the video, hit that subscribe button and notification bell, and you get it straight to your inbox, or you get notified about it anyway. But do you know what?
Another word for bi-weekly is fortnightly.
Fortnightly, yeah. But do you know what? The markets, I've always said, very interesting, and especially during lockdown, when people have not had a lot to do, you've seen this increased. In fact, Robinhood, apparently 100% increase in users in Robinhood app in America. It's not so big as over here. It's about 15-20%, I think, has gone up. But I always say to people, get into the markets. The markets are always there. They only shut a couple of times a year, pretty much the weekends, but they keep you active, and you're always, always learning, and it's constantly. And in life, it doesn't matter what how well you do, how big you make it. You've always got to have something to keep your mind active, haven't you? And I just think it's perfect for that. And you'll see, like the guys you interviewed, for example, recently on the Capital, Summit there. They're all sort of mega wealthy. They've all done really well. They still love the markets. They still, get involved with it. They love it,
Oh, yeah, the passion, you can just see it. I mean, the likes of Justin Urquhart, Stewart, David Buick, Martin Gilbert, and Chris Watling. I mean, they would do it anyway, and they just love it. You're right. And that's one of the things about it. You can do it until you're old, until you almost die, as long as you've got your brains. It doesn't really matter about your body. I mean, my old man, he's just turned 80 and he still absolutely loves it. And I've got a little story later on when we sort of talk about things. But yeah, I'm with you. Get into the markets and it keeps you busy, keeps you active, keeps you healthy.
Yeah, absolutely. No, it does. Keeps your mind ticking over. I've always said, I'm still learning, all the time. I've learned more about industry or business or life generally from researching than I ever would anywhere else. And I research it with a passion because, of course, you want to invest and money's involved. It gets emotional. So I love that. And like this week, it's been every now and again it hits mainstream news, the markets. But like this week it has. But
have you extended that learning into the bond market yet?
No. Boring. Bonds are boring.
Yeah. Well, anyway, you're exactly right. This week, what sort of struck me this morning was we've had blockbuster Novavax vaccine news. And this guy, we've had the fourth one, which is basically almost, but it hasn't quite been approved, but it's 96% effective into the old coronavirus. And the markets went down. That's the first time that's happened. And the reason what that is, I mean, who knows? But the way I interpret it, there's a lot of stress still in the financial markets. And that dovetails your observation in terms of the Robinhood, because as most investors will have actually observed over the last week, you've had this sort of Reddit trade where masses and masses of sort of Silicon Valley investors have all got together and started short squeezing most of the sort of the hedge funds who have gone short some of the stocks like GameStop and Bed Bath & Beyond and AMC and all these kind of guys. And those stocks have absolutely just gone through the roof. Unsustainably, no doubt about it. And what unfortunately that means is such that at some point when they go up, they're going to come down. And it's who's holding the baby when the party stops. And as they start to plummet, typically it's most of the retail punters who again get damaged. So you've had the blood first of all from the hedge funds, but a lot of the actual retail boys will also get hit. And I made an observation yesterday on Twitter, and it's a great vehicle clearly because you get an instant reaction. And this guy who was trolling me because all I suggested was sort of like maybe the US should introduce derivatives trading protections for the mom and pop investors as they have in the UK, because you have to basically self-certify as a sophisticated investor and prove that before you can then go into these derivative and options and all these long and short, because they are complex and they can work really against you. Because the danger is, and that's why you have protections in gambling and drinking and drugs and stuff, the danger is you go into something and it actually ends into bankruptcy and it impacts your house, your family and your kids and all that kind of stuff. So yes, it's great that we're basically getting...
What did the guy say then? When you said that, what guy trolled you for what? What did he say?
Oh, he basically said, no, absolute rubbish. He just basically, we shouldn't have any protections at all. We should just let it go. And I just thought, well, okay.
Well, I understand that to a certain extent. You make an argument for that because, let's be honest, you do want to see someone bankrupt themselves, but to a certain extent, it is survival of the fittest. Something a bit like that. If they wipe themselves out, you think, well, they're going to do it somehow anyway. If they haven't got the brains to realize they're really over leveraging themselves, then they're going to make some mistake in life, and they've got to learn. But of course.
But you have protections in gambling. When you go down to these, basically these crack sort of like machines down in the bookies and stuff like that. I can't remember what they're called. Basically, fixed odds betting terminals.
Fixed odds betting, yeah.
Yeah, and I mean they just lead to misery to people. So people who can't control that and I'm absolutely all for, and everybody is for equalising and level playing the market field. But where people frankly get into things and they don't know what they're doing, and they impact. They create social damage, whether that's through drinking, whether it's through drugs, whether it's through just gambling and stuff. You just got to protect those people from themselves. And I just think they just need some protection. And then that's all I'm saying. I don't think we should ban people, no chance. But frankly, I just think you could cause a lot of social damage. Look at cocaine. They were doing that in the 1920s and they're still doing it now, and it's causing absolute misery. But there's laws protecting most people from doing it. And I'm not saying this is cocaine, but let's be clear about it. These things is a casino. It goes up one way, it goes up the elevator one way very quickly, and comes down the other side extremely quickly. And somebody's going to be holding the baby.
Yeah, true. No, there's a lesson there, for everyone. Like I said, it's funny. I've had my 19-year-old nephew asking me, saying, "Is it too late to get into BlackBerry?" And I said, "Well, first of all, I don't basically invest in US stocks pretty much. I'm pretty much all UK. And I'm not into trading, so that wouldn't appeal to me. It's not my strategy. But I realize people who do that, are inexperienced. They're just chasing the money, trying to make money somehow, and they haven't found their strategy yet. And so they're trying to find their way. So, let him get on with it. If you ask me for advice, I give him advice. But I mean, he's got to find his way a little bit and understand what's. And that thing you said before, sustainable. That's even, going back, say, even like 3-4 years, I was more towards maybe trading than investing, and but now I'm looking for sustainable rises in companies that and those big rises like GameStop and all those companies there being short squeezed don't attract me anymore, because I know you'd have to jump in, jump out, or keep an eye on it. It trades all night. It's just so stressful, and it's not what I want to do. I want to sort of invest in a business that I know is improving. GameStop is not improving. They're shutting most of their stores. It's an old economy kind of company that's not going to do well. One of the guys took a major stake to say, get online more. One of the guys took a significant stake. And so it's an old company that I wouldn't have any interest in investing in. Okay, there's a trading opportunity, but I'm not into trading. So, but you have to find your strategy, I suppose. And that's the trouble. When you're new, you haven't found that strategy. You're just chasing anything to try and make you some money. And sadly, like you say, it's probably the inexperienced guys getting burnt on this. And maybe they'll be thinking out of the game and not come back. And that's the worst thing ever. Because, like I said, it's not only about making money investing. It's just a lovely way to spend time, I think. To read.
Yeah, it always has its stresses. But the point is such that for people who frankly need protection, you've got to. The regulator in the US needs to protect them, because you get them everywhere. But let's have a level playing field anyway. On the long-term stories, I saw one of your TrackWise Designs came out with a sort of trading update midweek, and they've still got a very good runway ahead of them. They just sort of like suffered a bit on Brexit apparently, and some of these.
No. The thing is, I re-released an RNS for them, because basically they came out with a trading update, right? And essentially, they're just starting, it's an inflection point where they're just starting to get good business coming in now and sign contracts. One of them was up to a £38 million contract with an OEM, EV OEM. Their revenue just started. Next year it's going to get bigger, but pretty much doubling again. But they did 110% revenue increase, right? And I think sometimes, there's lots of positives in that RNS, but they seem to major on revenues below expectations. I thought, why are you majoring on that? It's due to COVID that shut down one of their manufacturing plants, of course. And I thought, well, that's not a business problem. That's a global pandemic. So you could just reword that and say, despite us having to shut down, we did 110% revenue increase from 2.3 to 6.1 million. And the pipeline is as big now that I thought, I don't know who wrote that down on us, whether it got stuck in, via the no ban or regulatory issues. And I thought, why talk about expectations? Maybe you know this. Why would they focus on being below expectations when actually the revenue growth was phenomenal compared to, especially when you're in a situation where you're locked down for a couple of months? Why would they focus on that negative? I don't understand that,
Well, I suppose they felt as though they had to say it because there were sort of expectations was a 7 million turnover and it about 6 million or something like that. But I mean, that's why they had to make some reference to it. But you're right. Did they have to lead with that part, having effectively doubled their turnover anyway? And so I don't know, but
and the first thing you read, the first thing you see there is a negative in the first line. You think, what?
Yeah,
and so
exactly.
I did a video. I said, this is how it should have gone. Bullet points, revenue 110%. Biggest contract we've ever signed with OEV manufacturer, the 38 million, cash 11.55 million, pipeline bigger than it's ever been. I said, that's the way they should have gone. And then, in fact, I sent the video out and the share price went up. I said, see, when they released their RNS, share price went down by 16%. I thought,
yeah,
just reword it. I used all the same words in the RNS, just rearrange them and put a bullet points at the start. Because sometimes I find it hard to read big swathes of text. It's a lot in writing a decent RNS. And sometimes that's a reflection of the management, or maybe letting the nomad get involved too much, or I don't know what happens.
Or the PR agency, I don't know. But maybe
PR agencies, it's like, I shouldn't say this, but they just try and justify their job, and they rewrite something and redo this and that. And I think, actually taking a stand back on this is very good. They had a cracking year track-wise, and that trading update didn't seem like they did have a cracking year,
Yeah.
What a waste. Anyway.
Yeah, you should have a new line of business, shouldn't we? Sort of like a JW agency or something, PR agency.
Yeah. But if you read that, you think, guys, this seems like you've had an awful year.
Yeah,
it hasn't. You haven't had an awful year. It's the best year ever so far,
Another thing for investors is to sort of like, not major on, but think about is sort of like get a sort of like a group of people who are interested in investing together and have regular chats to them, because I do that. My father is 80. He's been investing the whole of his life. My brother is slightly older than me. I mean, he's he was a frontline sort of like merchant banker, and he's just like steeped in investment left, right, and center. So we have a sort of like a monthly investment sort of like Zoom meeting. And now on Sunday, it's great because, hey, we take the gloves off and we certainly have a good knock at each other, all in a good pot, in the greatest possible taste, sort of stuff. And we were sort of like chewing around sort of ideas over the weekend in terms of what the actual view of the markets, what the world's going to look like when we're all gone through mass vaccinations. Now, it dovetails perfectly now into the Novavax findings from today, because what's going to happen is that the markets at the moment has largely baked in that vaccinations are going to be a silver bullet for the world, Well, actually, they're not. And the reason, you and I have already sort of clued up on this one in terms of the strains and the variants, which is going to sort of like impact the efficiency of the vaccines, But also
efficiency.
Well, the effectiveness. The
efficacy.
Efficacy, Efficacy. I don't know. Efficacy, and it's basically effectiveness, and it's 95%, effective. But for effectively the South African strain, it's only 60% effective, and for people with a weakened immune system, it's 49% for Novavax, and this is leading edge stuff. So what we're going to have to do is we basically have to, as we talked about, reformulate some of the vaccines as we go through, which is no problem. Okay, that's absolutely non-issue. But it does mean we're going to have different attack vectors for this coronavirus. So vaccines are going to be right there. Testing, as we've talked about, antigen and antibody testing, no doubt about it. But equally, you're going to have big swathes of society who actually the vaccine is going to be not so much useless, but not very good. And this is what's come out of the Novavax this morning. It just underlined it. For people who have a weakened, and I'll repeat this, weakened immune system, you're going to get an efficiency or effectiveness, however you want to pronounce it, efficacy of less than 50%. Of less than 50%. Okay, of less than 50%. I'll repeat that again. So what that means, is basically these people, if they're vaccinated, it ain't going to really help them. You're going to need another drug. Now, how many people around the world have a weakened immune system? Well, you could flip it like, just how long's a piece of string? I mean, there's basically HIV, there's people with,
but this can be compared to flu as well, mind, because if you look at the flu, right, people die from the flu every year, even when they're vaccinated. So it's the same kind of profile as that. I mean, you say large swathes of people will be, the vaccine won't be effective, but the majority of people don't even need a vaccine for flu.
Yes.
Survive it.
Yeah. No,
so you will have that. So I mean, that's the big. That's why people are chucking their toys on the pram, saying, "Why you locked us all down?" Because they don't understand, because it's overwhelmed the NHS. The fact is, it won't affect you. We understand that, but you will pass it on to somebody else who it will affect, and they'll fill up a hospital bed. That's the reason we're locked down. But yeah, no, the majority. I wouldn't need a vaccine. You wouldn't need a vaccine really from it. So but there are people it'll kill. So we do need. But and like you say, the flu vaccine, it does good range from 40 to 60% efficacy every year. So but then again, you're talking about, say, if you get 10 people there, it won't kill. So if you get the most vulnerable 10 people, half them it'll help them, half them it won't. But
hey, let me just finish what basically what you've got there. How many people have a weakened immune system? Well, they reckon it's about 3 to 4% in the US. 10 million people in the US. If you look at a similar sort of scenario around the world, that's over 200 million worldwide, who have a weakened immune system. So what you're going to get, and this is the answer to the original question, what you're going to get is basically continued testing, blah, 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 lots of vaccination, which is going to work, and tweaking the vaccinations. But equally, you're still going to get a lot of people dying from this stuff, because it is deadly. There's no doubt about it. And again, which has come out from the South African study, is such that if you have a weakened immune system, essentially, then the chances of it incubating and mutating and changing that spike protein is greater. And the reason is because it has longer time to adapt to any sort of like antibodies you have, and you've seen that already with the antibody therapies from Regeneron and from Lilly. And so what that means is that you've got 100 or 200 million people worldwide who are actually, because they're the guys who are actually dying in hospital, the people who are hospitalization. So you're going to have to find, now this is the big bit, this is the one thing to go away. What we're going to need, we need a breakthrough science in antivirals. And I'll repeat that again, antivirals, which is a drug. Now, what drugs do we currently have on there, on the board? You know better than I, but it's basically steroids, Dexamethasone is the only one, or remdesivir, which is out from Gilead Sciences. The antibodies ones are problematic simply because they effectively act as a catalyst to speed up the mutation process of the virus when they're actually in that person. So I think, like antibiotics, antibody-based drugs are not a very good way of treating it, because you're going to get a worse scenario further down in the path with a vaccine. So the world needs a lot of attack vectors. First and foremost, it's going to be the vaccine. Next, we're going to need, a breakthrough antiviral to stop these 100 million or 200 million people dying over the next 20 years from COVID, particularly in places like South Africa, where there's high, incidence of AIDS and HIV, So this is coming back to the original story. We started taking the gloves off, me and my brother Michael, because he's actually an expert in all things healthcare. He's brilliant, and my dad as well, because he actually asks fantastic questions. And we said, okay, who is the number one in the world for antivirals? Well, I'll tell you, there's only one place to go. It's Gilead. Gilead, basically Gilead Sciences have already, and I'll repeat that again, produced, a antiviral which has solved hepatitis C. In fact, it's so good that they can't even sell any more of it, because there aren't enough people who get hep C. And they're trying to do the same with hep B, hepatitis B. And they've got a new drug coming in for hep D, which is the hepatitis delta. Now, it all sounds a bit technical, this, But if anybody in this world is basically looking for an investment into antivirals, it's Gilead Sciences. Is the best place, in my view, to be able to come up with effectively a silver bullet to help people once they've got COVID, to stay out of hospital, and if they're in hospital, to basically get them through it, to help out. There's nothing there at the moment. Now Gilead, is also big into oncology. And HIV, and they've got some good pipeline drugs and stuff like that. Now, what's really interesting from an investment perspective, Gilead Sciences, do you know what PE it trades on?
67.
Good idea. 10.
I've got so I've got Google finance or something, but Gilead, I'm looking at the chart here. But
It's
so it's hardly a small cap idea, though, is it?
no,
Taking one
hey,
billion.
forget about
Yeah.
small cap ideas. This isn't. I've said to you, I'm looking for healthcare, and you got to go at me last week. Okay, so earlier this week, having done a bit more research and bashed these ideas around with my father and my brother, I bought a full position in Gilead this week, and the reason is because one, it's cheap. And it's got very little. It's got net cash. It's absolutely, it churns out sort of like 20 billion of cash a year. It's got good franchises in HIV and hepatitis C, and in a very promising pipeline in oncology and immunotherapies. But and that's all basically baked into the actual price. I mean, a 10 times PE ratio for this year is not exactly cheap, and that's because it's losing. It's so good at hepatitis C. It's losing its revenues in that, and there's a bit of sort of like thoughts in terms of it might lose some sales also to the new HIV drug, long-lasting drug from Glaxo, albeit it has a better one coming through the pipeline, assuming it gets approved. But one of the main reasons why I bought it was not because it's got a good pipeline, good drugs and stuff, and it's the cheapest healthcare stock out there at the moment. But it's basically a free option of insurance if we basically, or when we need an antiviral. If these guys can ever come up with an antiviral, this
No,
one.
I agree, but it's a lot of moving parts there. You're saying a lot of ifs there. If we don't do this,
Oh yeah. I mean, this is a
let me
big.
ask you one question though. Let me ask you one question. Who's your broker? I literally have my broker. I've stayed with the same broker for years. It's just Barclays. And they, for some reason, they went to Smart Investor a few years back and they stopped doing international. And I thought, well, why have you stopped doing that? But I mean, who's your broker then? Who do you deal with?
Great question. Now, if you want to buy Gilead, and I have, where is the best place to buy it? Now, Gilead pays a 3% dividend yield, okay, which is actually pretty flipping generous. Now, if you want to basically avoid the US 15% withholding tax on dividends, stick it into a Lansgreen Hargreave or an AJ Bell. Hargreaves Lansdowne, that's right. Yeah. Or an AJ Bell SIP. And the reason is because it's set up as a trust, you avoid that 15% withholding tax. AJ Bell is where I've actually bought it in my SIP. And if you buy a lot, the actual forex, forex commission isn't massive. Another way I've actually also bought it is in my HSBC ISA, which allows you to buy US stocks, and that actually doesn't charge you a forex commission, but I will suffer 15% withholding tax going forward on the dividend flow in that. So you sort of pick and choose, but those are the two most cost-effective ways of buying it if you're interested in. It's an 85.
That's good information. You are very good like that. You are like an accountant. And
I almost took that as a compliment.
No, but yeah, it is. It's that kind of stuff. An accountant, you ask your accountant or a specialist accountant, they'd know about that. But is there what do I find really odd? I just go when a Gilead share price on Google, and it's Google Finances, whatever it is.
Yeah.
But they've got a chart there and stuff. And how can so many different sites be off on PE ratios? Because they've got PE ratio that's 67. I mean,
really?
What are they looking at? I never.
Oh yeah. No.
It's very rare. It's very rare. In fact, never will you see three different websites showing the same PE ratio. So I don't know how people.
I'll tell you what,
wouldn't you?
Yeah, I'll tell you what they've done. Yeah, I mean, basically last year, I think they wrote down an acquisition on the goodwill basis, and what it's doing is 67, which is showing you, includes all the write-off of the goodwill on a previous acquisition. They bought a business, had a immunotherapy. Sorry, it was basically autoimmune disease business that frankly had some lead drugs and they didn't work and they've withdrawn them, so they've written down that goodwill on it, and that's what it's showing you. It's showing its reported EPS rather than its adjusted. They're expected to do about $6.50 of EPS next year. The shares trade about 65, so about 10 times PE. They'll hit about $7 of EPS this year for 2020, but for 2021 it's about 6.5. And then
how many stocks do you have now?
9. But that's my first healthcare one. And to say, that has come through from speaking to people who are also sort of, you start bashing a few ideas around and seeing how the world lies, and other people tell you, look, you're wrong, mate. This is how it's actually going to work. And that's what my brother did. He basically said, look, with this vaccination stuff is great, but it ain't going to be a silver bullet. we're going to need antivirals, and we're going to need lots of other stuff, and then
Yeah.
and then the search is where best to go. And I'll tell you, Gilead is the best place for antivirals in the world. It's all, as I say, it is already found a solution to Hep C, hepatitis C. It's called virality, and then there's another one which is and then the other thing which is really interesting, what they do is that you've got, you get your first lead you get your first lead antiviral, and then you get your next generation. It gets better and more effective, and basically it's longer lasting, easier to take, and all that kind of stuff. So you continue with the actual franchise, and that's what they're doing with remdesivir. They already put it into trials with other cocktails to improve the effectiveness of it. And also what they're doing is they're actually looking at ways of increasing the application area. So sales of remdesivir next year will probably do all right, actually. I don't think they're going to drop off a cliff, is what the market expects. But regardless,
Was there controversy about remdesivir, whether it works or not, though? Didn't some people say?
No, it's not great. It helps. It basically helps, but it's not it's absolutely nowhere near a silver bullet. No chance. All it does, it's been clinically proven to reduce the hospitalization stay of people. So if you've got severe or moderate COVID and you're in hospital and you take it, it helped with Trump, and I think it also helped with Boris as well. It reduces your stay in hospital. It hasn't actually, and it has suggested in trials, it has suggested that it reduces the fatality rate, but that hasn't been clinically proven in terms of, statistically 80% probability and all that kind of stuff.
Do you know what? Yeah, no. Do you know what? I don't mind not being able to trade international, because one of the people, a lot of people suggest American stocks to me, and I said no. Do you know what? I don't want to. I know some stocks in America go bananas, and the biggest rise you've ever had. But you know what's going to catch them? And the biggest problem I think most investors have is that there are too many options, and they don't know what they're looking for. Like I said, you were looking for a healthcare stock, so you can sort of narrow the focus down and you do more research. But you have to have that in mind. When you have 2,000 listed companies in the UK and twice, 3 times that in America or around the world, where do you start? It's already hard enough for investors to start anyway. And I think sometimes you can get options paralysis, where you think, I don't know what to go for. And in the end, you just make a decision, not a good decision, because there's too many. I think the problem I have sometimes is trying to narrow it down, focus it down, look at what winning areas you like, and then focus, because you can make money on any stock pretty much, or decent money, as long as you get some quality filters and buy it at the right time, and it's going to be sustainable. That's the trouble sometimes. Too many options, especially for the new investor. It's so complex. Investing, they talk about PE ratios there. That's the most well-known one, but there's so many ratios, so much jargon and terminology, and there's so many stocks. I think, wow. And so a lot of times about narrowing down, and honing your focus rather than widening it. But like I said, you've got to start with something in your sights, like you did. You wanted a healthcare stock for a while. You've been saying that, and you take your time looking for it. And that's the thing, isn't it? People, it's just knowing what to look for. And that's
and one way of actually, sort of like honing it down, or where actually do you need to start? Well, if you're looking for technology or you're looking for healthcare, the best place, and again, my brother sort of like reiterated it over the weekend, it's who is the best in class on the science side. Science will lead where you actually go as an investor, because that will drive it. Okay, it may be price to the hilt, but if the science is best in class and the price works, that's the first port of call. See whether you've actually got that blend, that it's a reasonable price and it's the best in class science. And,
I suppose it depends again on what return you want. If you're starting off, you've got a small pot, you need to go for a bit more risky stocks that can double, triple. You can chuck a big chunk in Gilead because you've done well over the years. And so there are new investors who don't have that much, and so if they got a grand to spend, Gilead's not going to do them a lot of difference over the next year or so, is it? So they want to get something, possibly double their money in over the next year or more than that. They want to get a 20 bagger. They want to get a Novocyte. Did you see Novocyte?
Yeah,
the thing is, I did say, well, I mean, they are the king of testing stocks. They're the one who've really taken advantage of it. They were first in there, and off the top of my head, I think revenue was 20 times it was last year. Their cash, the EBITDA was like 1,000 times it was last year, up to something like 200 million euros, and their cash 50 times what it was last year. And they released that news, and the share price dropped. And people say, why is that? I said, well, that's a stock market. But stock market looks forward. The time to invest in this company was 8 months ago. You know,
Yeah.
complete when they started doing testing and they were first in the game, start releasing that was when, and that's why I did 20 bags, you know, pretty much more than that, because they're first in that area. And and now looking forward, this guy did ask me, he said, why is the share price gone down? I said, because people are suspecting the market's looking forward and thinking it probably won't do this well again. You know, that's
Yeah, well,
the
I
best.
mean, you know, there's
That
that class.
improvement, you're never going to improve by that much ever again. It's going to be testing around for a while, so
Yeah.
steady income coming in, but not that kind of improvement, you know, and
Yeah.
that's why it's gone up. So it's just looking forward. And you know, like I said once, you'd never drive a car, you know, looking through the rear view mirror. It's not going to work out for you. So it's good looking at, you know, financial reports and all that stuff, but they're 6 months out of date. You've got to be looking at what the company's doing now, as much research as you can via all different channels. Maybe that's social media, maybe just Googling anything you can to try and get an edge on the other investor to know what they're doing now. Even, you know, even trying to get in contact with the CEO or following LinkedIn or anything, you know, find out and reading every report and breaking down the figures and just even look at interims or trading updates, see, have they improved? They've grown since last time. And knowing that, because when you can see forward a bit further than the other guy and you can see what's happening there, that's when you can get an edge and get in earlier. Because all of us are trying to get in, you know, just basically a bit more research, not relying on. I saw this website the other day, and they talked about a company. I don't know what it was, but I knew the company had researched it, and they've changed management, they changed business model. They did a sort of analysis on this company going back 3 years, with the last three financial reports, and they give it like a sell or avoid. Or I thought, it's a different business. You can't judge this company on 3 years back. It's like a different management, different business model. And so be careful. When you get these automated services giving these scores to these stocks, it doesn't work. If you want to find a winner, you've got to sort of research and look at it as much real time as possible. Of course, you don't get figures coming out for 3-6 months afterwards, but you know it's hard. But after you try and guess where the market is going a little bit. Stock market's about the future, isn't it? That's why we've rallied in the markets now, and the actual economy is not in the best place, you know. But the market is seeing 6-12 months on the line, you know.
Oh yeah, no, and there's a very good adage, isn't there, in the market? It's better to travel than arrive, and that's what's really happened with Novocytes, is that you've had a lot of people who have sort of like bought into the story over there, and they've just basically made a lot of money and decided to just take some of the profits off the table, you know, on the results today. So that's all that is, you know. And I would say, in terms of the sort of top level on the markets, you know, we talked about it the last 2 or 3 weeks. The stock market is a bit sort of like weak at the moment through fears and stuff. Well, you know, largely the economy should be getting back into sort of like, you know, full momentum, but certainly by the second half of this year. And on that basis, most companies will do well. It's just sort of like, you know, just going through this uncertain period and, you know, hold on and look forward to, you know, to the future.
That saying you said last week stuck with me, you know, and we said last week, I did say, how are you feeling? I said, I'm feeling a bit bearish, really, because everyone seems to be quite bullish. And you said, yeah, there's too many people on one side of the boat. And that stuck with me. I thought, yeah, that's true. They can tip over.
Yeah.
And I'm glad we've had this little correction, really, because we need the corrections.
Yeah.
You know, that's what it's a market. And they call them corrections because the market overbuying, getting a little bit too, you know, bullish.
Yeah.
Is overboiling a bit, you know, overheating, and needs, and I see it really as an old-fashioned kettle. It needs to steam out a little bit, come back down, and then we can start off again. Right, it can't get to the next level until it, you know, hits that ceiling, comes down a bit, and then goes back up again and builds a bit of strength. And I kept feeling, I'm glad we've had a little bit of a pullback now, because what I didn't want is, like, it's getting towards almost, you know, maybe mid-February, where they're going to announce a review on the lockdown, and maybe if it's positive news, the market's already at the top. You don't want that. You want a good run up, then that news take it higher, you know. So yeah, so I'm glad we've let a bit of steam out. That's the way the markets work, you know. So you have to sit through it. That's all. I did a survey saying what affects you most: the pleasure of a nice gain or the pain of a big loss.
That's an easy one.
Yeah, and 72% said
loss.
Pain is worse, yeah, because
yeah.
you don't plan for the pain. You don't plan for the pain, and essentially, you know, you want to gain, and you go into investing to make money. But if you get it wrong, it hits you exactly where you don't want it to hit you. It takes money off you, and so that's why it's painful. And let's be honest, the big losses, if you get it right, shouldn't happen, you know, as regular as the gains do. That's the whole point of investing, you know.
If you invest over long term, and markets go up 80% of the time, but you've got to be selective, no doubt around it. You can easily lose a lot of money quickly if you just throw confetti at it, you know, and you know, that's where you got to be careful. But I would say what's interesting, you know, in terms of the actual schools going back on the 8th, that is really, you know, encouraging, because what that says to me is that they're absolutely on track to vaccinate those 15 million vulnerable people in the UK by mid-February. Did
you see the figures this week, though? The figures this week are really disappointing. It's like last week we hit 500,000 on a Thursday and Friday, pretty much 470,000 and close to 495,000. Thursday and Friday. But Monday and Tuesday is always a lag after the weekends. It drops. And that happened this week. It dropped to like 200,000 and then went back to 211,000. And I said, well, that's Monday and Tuesday. Then Wednesday came and it came the same as Tuesday. And Thursday and yesterday, what's going on? So unless we knock it at the park, we are now behind. We like vaccinated 300,000 I think yesterday or something, but it needs to be up for 411,000 a day to get that 15,000 figure. And I think, what's going on here? Unless we've done the snow and shutting down centres. I know some centres are shut, and maybe some old people wouldn't go if it snows out there. But this week is not as good as last week, and that's a
now
that's
if they put a stake in the ground for the sort of like the 8th of March for the schools, which is 3 weeks after the date of the 15 million, i.e., such that you need 3 weeks for this thing to build up your immunity, then that says to me we are going to knock the ball out of the park in terms of the vaccination program in the last 2 or 3 weeks. And if you've got that Novavax also coming up, they've stockpiled some of theirs. We've got 60 million doses now. They've already been manufacturing a shed load up in Teesside, so that's a matter of, again, just bring it on. I'm pretty, I thought that was really quite positive news.
I just think at the moment it's we've the first vaccine day was when we discovered the big news was we've got a vaccine that's effective against.
Yes.
Now we've got a big weapon. We've got our nuclear weapon out here, whereas we didn't have anything. All we tried to do was run and hide from the vaccine last time. Now we've actually got a weapon to take it on, and now we've got 2, 3, 4 weapons, and they're all going to be coming online. So the vaccine numbers will go up and up and up, and in the end, all the vaccine can do is mutate, and it's starting to run from us, I think, to a certain extent. But it'll still keep attacking us. But do you know what I found, which is annoying? We said last week, the more I'm in this game, and you do lots of research on a company, then all of a sudden, for some reason, you jump out emotionally for that. And I've done that a few times, and I've seen it. The stocks go, take a bit of a dip, and then go further on. It's happening again this week. I mean, a company we know is Expediator, and I talked about that company when it was like 20 pence a share.
Yes, I know.
And during the dash for cash, I thought that's in logistics. That's going to get knocked massively. So I jumped out, and it did go down. But now it's at 43 pence. In the trading update today, up 18%. So it's more than double what I fear. So I think this jumping in and out of something, it is a false economy. If you've done research on a stock and you like it, the ambitions and the management, you know where they're going, and you've just got to hold through those little dips, maybe even top up, if you've got a lot of confidence. But I think to a certain extent, the more I see it trading, it's a false economy to a certain extent. I mean, you've got to be either very, very good at it, because we know from the stats on these spread betting sites, 70% of people lose money, and that's a stat to get over. And you don't even bother with that stat. Play with the odds, and investing longer term is the odds, isn't it?
Absolutely, it's in your favour. Yeah, I mean, as I say, and look for the areas that you want to invest in. I mean, technology, I've got reasonable, is always a good area. Healthcare now, I've sort of dipped my toe into a bit, and then you want to sort of like hit a few spots as well in sort of like areas like renewables and, as you say, EVs and this sort of stuff, but at the right sort of entry price. And you got what you sort of like then have got, all you're doing is waiting, because effectively the fundamentals are you've got the tailwinds behind you, and it's a matter of basically the share price catching up with the fundamentals over time. If you're in a dead industry or a dying industry, then that becomes a lot harder, because it becomes effectively you're buying something on the hope that it pops, and then effectively you can get out before it dies. So if you've got a good tailwind behind it, it always helps, and that's why then you've got time on your hands. You can just basically hold it. It goes through bad times.
Trend is your friend. I always said trend is your friend. In fact, do you know, oddly, I heard it's not a positive really, but is it Larry Fink, head of
BlackRock?
BlackRock, biggest obviously investment house in the world, 3 trillion, I think, assets under management. But he said the first positive thing about oil and gas, well, it wasn't really positive. He said we can't just pull out of these industries straight away, because jobs will be lost, and we need a transition period. So saying that, I think that's what they've done. but he said we've got to be careful, because there are business and livelihoods and communities relying on these industries like oil and gas, and we just pull out. Not only will we kill those communities, industries, and jobs, but would also be a shortfall in energy, because we haven't got there yet. So we've got to be careful. There's still a couple of years of investment, or a couple of years, more than that probably. But that's the first sort of almost fight back I've heard, or a bit of defense of that industry for a long time, because it's all been a downward and money just pouring out of it, divestment. And I thought, and that's why I see a lot of people on Twitter with oil and gas stocks. I don't want to touch them anymore. I just think especially oil, it's just like it's in the wrong trend. It's going downwards, isn't it?
I think gas has got a future, but I think oil is a bit tougher. And it was quite interesting actually to see the statistic which came out. I think it was the Environmental Agency saying that the UK's electricity production last year in 2020 there was more renewable electricity generated than there was on fossil fuel, which is the first ever. I mean, that is a real statement of intent, just because we've got all that offshore wind farm stuff coming through.
Okay, one more thing. So what percentage cash do you have left?
I've got about 20%. I'm going to look for another healthcare stock. So
okay,
I've got one. I'm taking my time, but hey, as I say, when it comes, it was a good question you asked in terms of what returns you're looking for from Gilead, and it ain't going to double. Anybody take the bet it's going to double overnight? It isn't. Yeah, but I'm absolutely looking. If I can just do 10% on that per annum for the next 5-10 years, I'll be happy. And it's a big cap. It's solid.
Well, for you, if you do 10%, that's about 5 million quid a year, isn't it?
Yeah, it's your house with 10%. You've got a 50 million house.
But that's what I'm saying. Because I started talking about when I started talking about portfolios and how much money you should have here and there. Mate of mine on a podcast who just started, and I've been going along with him, said, yeah, but that isn't viable for me. Even scaling to a company 3 times. If I'm only spending £1,000 on a company, that goes down to £300 a trade and an investment. And I said, okay. And I realized then that, there's a lot of people starting off with smaller pots. And so, they've got to take a bit more risk on to try and get a bigger pot. And luckily, when you get a bit more experience and you've built that pot up, you can take less risk, which is, it's perverse. That's the wrong way around, really, isn't it? Once you get more experience, you should be more used to a bit of risk and understand what you're doing. But when you start off, you need to take a bit more risk, I think.
Yeah, I mean, also there's another well-trodden adage. You only bet what you can afford to lose. Yeah. Absolutely do not jeopardize your family's quality of life or even your own quality of life. If everything goes to zero, which would be awful, but if everything did, then could you walk away and it wouldn't jeopardize the rest of your extended family and friends? And if the answer is no, then look, just pull your horns back, because these things do go pear-shaped occasionally in the worst case scenarios. I mean, I only invest with spare capital, but don't overextend yourself. I mean, you've just seen it, haven't you, with what's happened in the States?
Yeah.
Continued, I mean, as I say, there's continued stress in the markets on excellent news today. That says to me, you're going to see a lot of dead bodies coming through over the next 2 or 3 weeks. Yes, it will be in the hedge funds, but there'll be a lot of private investors who will not be able to walk after this.
Let me ask a question. In this country, I don't know about this. Spread betting, can you lose more than you put down now, or is they stop doing that? Because with investing, of course, you can only put in as much. Right, you can borrow money, but you should never do that. But you can only lose if
No, you absolutely. No. If you go naked, particularly if you go naked, if you sell somebody an option or you sell somebody a futures or whatever it is.
No, private investor on say IG index, for example, can they lose more than they
can? Okay. Okay. But you have to self-certify. The restrictions is such that if you want to do anything in derivatives world, options, futures, forwards, anything like that, you have to absolutely tell them that you're an experienced investor and you've got the asset back to actually, to stomach the losses. And you've got to prove and demonstrate it to the FCA's requirement. That is the control. So it doesn't stop you doing it, but it absolutely puts a control. The onus is on you to prove that you are educated and knowledgeable enough to be able to put those trades on. Yeah, you can't basically just rock up and decide, right, okay, I'm going to lose 3 times my house. People just, that's just not, you can't do without, showing at least just some financial worth. And it's the CFD boys who get blown up more than the actual, the spread bettors, because the spread bettors have got pretty good control on the retail side, because they're a bit like effectively William Hill and the real sort of bookies, because they make sure they don't, if they're going to lose, if these guys lose, they don't take the bookie down. But it's the CFD boys who allow bigger bets and on margin. I mean, you used to have it such that you could ratchet up your position 100 times on the Forex market. It's now at about 80 or 20 or something like that. So it's not, it's a lot lower. But in the States, it's still a flipping casino. It just is like throw the dice. And that's why you get short positions of 140% of the float, which is what happened in GameStop, because you get silly positions. But anyway, the answer to that is you can't, there are protections. And that's why I said on Twitter, you should have those protections for people who don't know what they're doing, just so that they don't get bust, in the States. And then I got trolled.
Yeah, I know. They should have some kind of system. Maybe if you've experienced, you've been on that platform for a long time, so you can trade and experience. Maybe you can, but they should maybe have a sort of scale of how much leverage you can get based on your experience on that platform, because otherwise it's ridiculous. You can lose actually more than you put down.
Oh, massive.
It's scary enough as it is. I mean, investing, you don't need that to add to it.
Yeah. I mean, just say, for instance, if you were in GameStop, and you hit, you basically said, right, okay, I'm going to give somebody a call. I'm going to basically sell somebody a call option at $50 because it's only worth $5 GameStop. I'm going to sell them a call option, deep out the money at $50 and not put basically a hedge against that. Yeah. So you're naked at $50. It goes to 350. In theory, you've just lost £300 by collecting a premium. You've probably got a 50 cents off the back of it. So you've got yourself 50 cents and just lost $300. And if you times that by 100,000, which is effectively the option size or the future size, that's a lot of bread who you lose overnight.
Do you know what? And it keeps coming back. I said this with Russ. Keeps coming back to, I don't know, Warren Buffett gets a lot of quotes,
yes,
given to him, and they say it's him. I don't know if it's him, but
no, it is him.
He's a genius quote generator, and but that thing about keeping it simple. I mean, to me, options are a bit too complex. Just investing in stock straight off. There's plenty of moving parts in that, plenty. Now you throw in call and put options and all that stuff, and Warren Buffett say keep it simple. It's not like Olympic diving. You don't get points for making it difficult. Keep it simple, and if you don't understand something, don't get involved in it. Yeah. And I think that's.
I thought you were going to mention his famous quote on derivatives. Yeah.
What was that?
Okay, that he basically came out about 5 years ago and said derivatives are a weapon of mass destruction, and he's right. Because that's what's going to happen after this. And that's why you've seen distress in the market today. There's going to be a lot of dead bodies who are coming out in the next 2 weeks. Professionals, retail, high net worth. There'll be a lot of people who've got a lot of money, but equally there'll be a lot of effective misery created by it.
Yeah. And it's sad. It's contagion, of course, and sentiment and liquidity is problems. But like I said, sometimes this is needed in the market, but sadly there are victims, buys and sells. There's two sides of the market. Marvelous. Anything else, Paul? You want to chat about anything?
That's great. That's great. We'll chat in a fortnight's time.
Yeah, fortnight's time, and well, we could actually carry on until then. But that's the market. So you can keep talking about everything forever and ever, I think. But listen, if you want this next one to your inbox, hit that subscribe button and notification bell, and of course you can hear it on the podcast too. Cheers, Paul.
Yeah, cheers, Justin.